Well, good afternoon and welcome to Sibos Today. We have a packed schedule, so let's get started. My colleague Stephen Cheer met up with three leading banking experts to talk about the challenge of bringing banking to all of India today.
Okay, gentlemen, well, welcome. Welcome to Sibos TV. Thanks for joining me here. Ashwani, let me start off with you because I understand there is a program, the Jan Yojana. Did I say it correctly? The program there, it's brought on board 27% new bank accounts in less than 1 year. Can you tell us a bit more about the program?
No, this program is called Pradhan Mantri Jan Dhan Yojana. So it was launched on 28th August, and with the target to have financial inclusion and to be completed by 26th January 15. So during this campaign, though the program is already on, but during this campaign period, about 180 million accounts were added. Right. 180 million accounts were added. And these accounts have a balance of about $3.8 billion as on date. So a huge amount was mobilized in this account, and the purpose of these accounts was for financial inclusion. India has roughly 250 million households. So now, as per our surveys, roughly 97 to 98% households have one account with us, with the banking system. So the purpose was financial inclusion, and to a great extent that has been achieved.
So is this like an ordinary bank account? Do people use it to put their money in for transactions? Is it meant to be just something that anyone in India can use?
No, these are general accounts, saving bank account, basic saving accounts where people can put their money, withdraw their money, do transactions. And added to this, we have also issued debit cards to all the account holders so that the transactions happen. And we have also given insurance to the card holders. So in a way, it's a comprehensive financial inclusion to start with, adding to them. And as the operations in the account increases and are done in a proper way, they are also entitled to an overdraft limit.
I see.
So up to 5,000 rupees, which may translate to about say $70, $80.
Right. So I have to ask you.
Can I just add to supplement what he has said? Let me tell you that India is a country which is spread out to 660,000 villages. So the 250 million families, which Ashwin has said, have been covered by the banking industry in the given time span, and which has been recorded in the Guinness Book of World Record. And let me tell you that the debit cards which Ashwin has said, these are the India's own debit card called RuPay debit card. You see, we have our own National Payment Corporation and we have got our own debit cards. That's the real matter of pride.
I see. But how significant is this? Because again, in a large part of India, as you mentioned earlier, it's in the rural areas. And one would imagine maybe the infrastructure isn't there to support this. Is that true, or does it still reach out to those areas?
Stephen, it's very interesting. I'll take it from where both my friends left. See the mammothness of this whole exercise. Today, when we say the entire population, all the households have one bank account, it is something unimaginable. And mind you, it is not just like mobile-based account. It is supported by an infrastructure created. You know, it's popularly we call it as JAM, that is Jan Dhan Yojana, Aadhaar, and mobility. What it actually means is you have, through Jan Dhan Yojana, opened all the accounts. And we have given identity card to every individual, 1 billion identity cards given in the last 3-4 years. So what it actually means is you have an identity card, and NPCI, National Payment Corporation, has built an Aadhaar-enabled e-enablement system, so that all the accounts are e-KYC enabled, regular bank accounts. It's a huge platform that has been created. On that, you build on that and see the technological transformation happening. And it's very interesting. While the banking model is challenged, right now we were listening to Internet of Things. In India, the way the banks are looking at, I mean, it's true that there is a blurring of territory that's happening. E-commerce companies are getting into banking. 2 large e-commerce companies have got into banking right now. The telecom companies want to get into banking. At the same time, banks they're looking at the challenges in more open way. So a very interesting thing that has happened is, which is what remarkable in the Indian situation, is Reserve Bank of India, or Central Bank, has given 21 licenses. Never before in the history. 21 licenses, 10 for payment banks, 11 for small banks.
Small banks.
It's a path-breaking sort of situation that's happening where you connect every household into the banking system.
Right.
Okay. Now, how do the banks are looking at? I mean, specifically when you look at the challenges, how do they face? Well, the largest bank in the country, they are today talking. Today we have their DMD here. I was talking to him today morning. He says, we can't innovate ourselves. We'll partner and collaborate with all the technological innovation that is happening. That's the way forward. Now, there's another an interesting bank. The CEO of the bank was never keeping a mobile with him. He is known not to keep mobile with him, but very efficient CEO. Once I was told, he came to Silicon Valley, went back and called the entire team and virtually challenged, we will not be existent. Look at it, how exactly we can go forward. And today they have introduced what we call it as a chiller. It's a mobile-to-mobile payment,
right.
person-to-person payment. They introduced what is called as a Zap. Basically what he's telling is, I have my customers, 30 to 40 million customers. Why should they go to an e-commerce company? I'll give them a platform. Let the discount come to my customers.
Okay.
And he's offering what is the world best standards in 10 seconds alone at the dealer's network. So this is a very interesting times that's happening.
Okay, so has that happened here? With a platform such as this, have you been able to reach out to the many customers there and to then get them to become your customers?
Yeah.
No, this is what I told. We have already got on board about 180 million accounts which have come to the bank's fold.
Right.
They are operating. Transactions on ATMs have considerably increased.
And they're using it. They're actually using it. It's not just something they started.
They are using it, but still we have a major challenge. About 40% accounts are still non-operative. We have to make them operative. But what we are seeing, the number of accounts which have become operational themselves are very high. So things are happening in a big way, and as Nair Sahib has said, number of other platforms are coming. Banks are embracing technology, collaborating, and cooperating. Yeah. So the challenge being so huge.
So let me supplement what Ashwin said. See, we are catering to this group through almost 68,000 branches in the rural and semi-urban areas. To supplement that, we operate on a business correspondent model. And through business correspondent model, another 250,000 agents. They are literally moving in those geographies with the handheld devices, which we call a micro ATMs. And these micro ATMs would be the interoperable, meaning thereby that they are actually mobile banks. Right. All cash in, cash outs will be permitted through those the handheld devices. Okay. So it's literally banking reaching to the last mile.
So this is amazing because in many of the discussions, the concerns is that fintech or sometimes technology might disrupt what already exists. But from what I'm hearing, technology has allowed you to really reach out to everyone, and right in the rural areas where perhaps the physical infrastructure is not there, correct?
Physical infrastructure, that's the reason.
Therefore, like somebody was saying, it is not disruption. It is innovations which are happening to cater to those people. So no disruption has happened as such.
So this will be significant.
This will be significant.
In terms of, but then the question is, will the people there, now that they have access to these platforms, will they know how to use it and what to use it for?
See, let me tell you, the biggest benefit of this, that almost 60% of these account holders are the beneficiaries of some or the other government social security programs. And the entire benefits under these social security programs is now being put seamlessly from the government to the bankers, to the account holders. And thus, by default, they would be using these accounts. And then we are really embarking as the Indian Banks Association heavily on the financial literacy. In fact, we are trying to see that we move from a push model to the pull model, where the need is created. Because the person knows that if he has got a banking account, if he operates as well, as he rightly said, we give them the credit facilities in the shape of overdraft. Going forward, he may get the facilities of his any kind of enterprise which he wants to do. In fact, we have recently launched upon the Pradhan Mantri Mudra Yojana, where all the micro entrepreneurs are being given the Mudra cards. The card which enables him to draw the cash from any of the ATMs, which enables him to deposit the cash at the day end, out of his business. I think these are the great enablers we have created for the entrepreneurs to really get
That's the word, enabler, because I think now I mean, in a way, if you told people that you can use it if you like, they may not. But now you're saying, well, you will get your money through that. So they're forced to use it, and they will learn quickly because they have to use it to survive. But how has this changed the scene also in terms of, because there's a large young population, maybe those under 35, they've grown up in a world where technology is very much a part of their lives. They all have smartphones.
Yes.
Will this also enable them to perhaps do more?
Absolutely. No, it's very interesting. In India, it's not only, age of 35. Today we're talking about 1 billion mobile phones. But what the conversation today is, how many of them are smartphones? What is projected is, in another 10 years time, 60% of the mobile phones are going to be smartphones because it's just available for a very low cost. To see the power of what it can make. So the transactions can be done at the hands of the very common man across the country. That is the enablement that we have created. Today, if you really ask me, what is it that the SWIFT is going to do there, it's a very interesting situation coming to in India. While we have all these things, all the connectivity is very sort of, dispersed actually, and multiple vendors, not very cost effective. Your challenges is paper-based. How do we connect all those things is the big challenge that SWIFT is taking up. When I look backward, when 40 years of my banking career, the first major investment happened in the banking sector is into centralizing the accounting operation, what we call as a core banking. And that is a transformational. But today, the second level of transformation that is going to happen once the SWIFT is there is to create that pipe where you connect the market participants, financial institutions, the securities. You have the one pipe on which the innovation is possible, on which the whole transaction will go, very robust. This is the next level of innovation that's going to happen. That is the reason SWIFT India has, set up its...
but I have to ask you then, because isn't that the next big challenge? So the banks, maybe all the banks are talking to each other. They have that pipe, but it's no point if nobody else is on that pipe. None of the retailers, none of the people that the consumers want to reach out to are on that pipe. So again, are you at that level now where this is something, a common platform that allows everyone to transact on one?
So let's look at it this way. One, you have connectivity between the financial institutions, market infrastructure, all the major players and corporates. We may move down to small-scale industries. On that, you have mobile-based sort of solutions happening. So I think it will work one above the other to reach out to the entire population.
Let me just supplement what Sir said. Besides this, we have created a payment platform called Bharat Bill Payment Systems, which will enable every retail payment to be made through the mobile. And even though you do not have the large population of the smartphones, we have a program called the National Unified Payment System, again by the NPCI, where even with any kind of a small phone, you can do the normal banking payments through that, the payment to customer. All kind of normal retail activities could be done through that.
Without a smartphone.
Without a smartphone. So you've made it easier. The barrier to entry in that sense is much lower, because everyone will probably have a mobile phone, but not a smartphone. But then there are concerns about security. Would that be something that one would, because if you told me to make a transaction via SMS, I would be quite concerned.
The transaction is capped, and to be very frank, that we have tied up with the telcos to ensure that normal securities are really ensured.
So is this meant to be just a starting point to help people ease in?
This is the starting point. As we gain confidence, as we see that security issues are addressed, the limits will be enhanced.
Actually, above 1.2 billion population, 95% of them, they need small transactions. So the capping is what we call it as, 2 lakh, that is the amount which can be transacted. So it is, to that extent, security-wise, not much of a challenge that way. And the way they have now, some of the operators operating it is like WhatsApp on a mobile. You have, those members where you normally transact, their names are already there. You just sort of send on a, touch of a button. So it's very, very simple, very easy. That's the way it is.
That's good. The biggest achievement, as Mr. Nair said about the unique identity, which we call Aadhaar, it is the biometric based. And most of the devices which are being operated in the rural areas, micro ATM, they're all biometric enabled. And thus, even the security is really ensured through using the biometrics. And as you have a repository of the biometrics, which is called Unique Identification Center. So right. I think a lot of, the security is ensured through this activity.
Yeah. Of course, amazingly how we all only have one unique fingerprint, right? Thumbprint. So, all right, gentlemen, thank you so much.
Thank you so much, Stephen. Thank you.
Well, thank you very much to Stephen then, and the panel as well, for looking at banking in India. And Stephen actually gave me a guided tour of Singapore. He carried on with his personal tour with a visit to Chinatown, and he introduced me to the famous hawker food tradition. So, this is
Chinatown.
Yay!
Welcome to Chinatown. I guess back when Raffles was trying to manage the town, he felt that there was a need to put different groups of people in different areas, and Chinatown was where just most of the immigrants and the Chinese people were housed, and they brought their trades, their wares, their food, everything, their families right here. There's actually another name for it. It's called a New Ter Sui. That's in Mandarin, which also means ox cart water. Don't ask me anymore. That's about all that I know,
You do look confused as you're saying that.
Okay, hang on. We'll sneak down this way and see if we can take a look at the...
So these lovely lights here, they got stretched all the way back here. Is that like that all year round?
Not all year round. Chinatown is a relatively short stretch. So this is where it ends, actually. If you look over there are no lights. It's about maybe a 500-meter stretch. It's more when we go in there and dive into the little streets, is where you'll see all the activity, lots of unique shops selling traditional Chinese medicine, some wonderful desserts, lots of local fare as well. In fact, I'll bring you to Food Street. I think that's where we can have a nice bite.
Well, I reckon we should have a meal out tonight. We deserve it, don't we?
We do indeed. These shop houses, they've kept the facade, and in the past, you've heard of something called window tax?
Oh, yes.
Yes,
yeah.
Same thing applied here.
Well, only your car taxes are very high.
Yeah.
Are they as high as
well,
your
they don't
car
have
ones?
window tax anymore, but in the past, how I guess...
think every country's had a window tax.
Well, we
at
took
some
it from you
point.
guys. We learned it from the British. That's how it came about.
Oh, no, we've given you some terrible things over the years.
So some of them have fake windows, obviously, so you pay less taxes. But otherwise, let's keep moving down.
So here again, we've got some more restaurants.
More restaurants, shops. You can buy souvenirs. This street would largely be tourist because of all the souvenir shops. You get a few foot reflexology kind of places and things that, I guess if you're a tourist, you want to come in, have a drink, have a break.
Well, I tell you, I love a bit of reflexology. I, in fact, have one reflexology session a week. And
really?
I
Okay.
swear by it.
Okay. Yes.
It's beautiful here.
Oh, the pineapples.
Yeah.
Yeah, that also is quite unusual, and usually, again, comes out during the Chinese New Year. It's meant to something to do with good luck.
So imagine during the Chinese New Year, this place would probably be able to film
this
now.
would be.
It'd be absolutely heaving, wouldn't it?
Yeah. It'd be massive.
And here we've got some typical Chinese.
So little outfits for the
here.
kids.
Yeah.
This design very popular in a sense, or well known because of our airline, Singapore Airlines. They use the same unit.
Wow.
Wow.
There you go. Can you fan us?
Okay.
Yeah.
Extra charge,
Extra charge.
Extra charge. Here we go.
Yeah.
Oh, yes, I can definitely feel
She wants to
effect.
see how effective it is in
very
keeping us
effective.
cool.
I go faster, okay?
Yeah. Who needs air conditioning when you have a fan this size?
Okay, I'm very tired.
So these are silk?
Silk different, and this is done by hand.
So this is much more expensive. So how much more would that be?
$12,
Yeah.
$23.55. This one is $26.65. The upper one is more costly.
So is this metal?
No, this is the, what do you call, 这个叫什么了?
Bamboo.
Oh, bamboo.
Oh, I see.
So I think it's nearly time to eat.
It's time to eat. It's time to eat.
Still not enough time.
Yes, here we are. This is Food Street.
This is Food Street.
This is the Food Street, that's right. So
So-
we can walk down and local food, basically, local delights, and I'll get you to try a few. We'll see what tickles your fancy.
Chinatown Food Street, here we come.
And it's got air conditioning. There you go, perfect.
Yeah. Do you know what? I think we've deserved a good meal. Don't
That's
we?
right, we do.
Yeah.
So why don't we do this? So you
Yeah.
sit tight, and I'll go pick up a few dishes.
Yeah.
And come back with it, and then
See how
we'll
we go.
discover them together. Okay.
Don't be too long.
Okay. Alama? Okay, just one more.
Ooh, yummy.
This is fried oyster omelette.
Lovely. And
Oysters
I've
and
got
egg.
duck.
You've got the duck noodles. This is rojak. It's a mix of everything. Got some cucumber, some pineapple, and a sweet sauce with some tapioca. Fried prawn noodles.
Yum.
Noodles with prawn and some squid. This is a soy sauce chicken noodles. And there you go.
Well, I must say it was incredibly delicious and exceptionally good value for money. Well, I'm now joined by Wolfgang Stockinger of Deutsche Bank and also Irene Mermagidis, who's the Managing Director of Regis TR, and also Roman Chernov, the Executive Director for the Russian National Swift Association, all three here to talk about standards. Welcome to you all. Now, I must point out that Irene is going to be talking about regulation. So, Irene, don't feel I'm being rude to you, because first of all, I'm going to address the gentleman over here to discuss harmonisation. And yesterday on Sibos TV, we actually featured the Harmonisation Charter opening ceremony, which had a real buzz about it. And I get the feeling that harmonisation is one of the main themes of Sibos and also of the Standards Forum. So why is this so important? If I can start with you, Wolfgang.
Of course. I'm happy to answer that question. I mean, it's all about communication, yeah, and if communication is not standardized, you are in trouble. Yeah, therefore it's important that ISO 222 is spoken by all parties with the same language. And there have been examples by banks in the business with corporates, where each bank has had their own, let's say, ISO standard. And then, of course, then the corporate asked it for harmonization and standardization, no surprise. And one outcome was CGI. Yeah, that with CGI we allow corporates to send us instructions all over the world, which then can be executed in a standard way, and also the response is standardized.
So that common language theme, we've picked up that before actually on Sibos TV. If I can turn to you, Roman, what actually is the problem? Why is there a need to standardize the standard?
Well, harmonization is great. I'll just speak about one example we had in Russia, and Rosswift had to deal with it a couple of years ago. We had, in fact, two central depositories, because it was until 2012 the system was decentralized, and although both were using ISO 15022 at that time, there was certain flexibility in the standard, and market participants had to deal with both organizations separately, and that brings a lot of costs and lots of problems. So we know how important harmonization is, and I would say that this is the strategic direction of Rosswift, of the association.
So it helps lower costs, doesn't it?
Definitely does,
Particularly
yes.
when liquidity is so important to you and you need to find ways of actually improving your margins. How about the challenges of creating a cohesive framework rather than what I get or gather is a fragmented system at the moment?
So it's fragmented in a sense because there is no global standard. I mean, that's the core reason for it. I mean, if you take SEPA, at least in one region, all participants and stakeholders have tried to come up with a common standard, but even in that area, we have seen deviations from its standard, which then related to what certain nations have done in order to, not to compete, I would say, but to differentiate. So it's very important, as we said before, that there is this common language. Otherwise, it's easy to misunderstood someone else, yeah, and therefore that's the reason. And again, as you said before, efficiency is one thing, yeah, and of course also it's not only one direction in the sense of getting an order, it's also to playing that feedback back, which is all about harmonization, where it comes to not only pain messages, to being a little bit of technical, where it also comes to CAMP messages, yeah, where also these clients need for reconciliation of the information received.
And I've heard that phrase, the 50 flavors of SEPA.
Yeah.
Have you heard that one?
Yeah, my 50 is maybe too much, I have to say. But of course, likely there have been flavors. And of course, that is related to that ISO is a format. And of course, is carrying content. And then there is something like, I don't know, mandatory content, where there is agreement how the content should look like. But there's also flexibility. And guess what? If flexibility is there, people use flexibility. And where it comes to, let's say, something like business codes, they differentiate maybe by country. And that, of course, make it harder for reconciliation, yeah, if even, let's say, a certain code is used for different purposes.
So, Roman, why not stay with, say, proprietary or FIN standards? You know, why are we moving those market infrastructures to this ISO 20022 standard?
There is a strong reason for that. First of all, it's the Russian regulator, which adopted the strategy, which says that by 2018, 20022 is going to be implemented in the majority of segments of the Russian securities market, because the central bank regulates both. Oh, sorry, in the financial market, because the Bank of Russia regulates both securities and banking.
So, in terms of market infrastructures, what are the key drivers here? Is it down to regulation? Is it new services? You know, why do you think people are getting excited about it?
I mean, I would say there are a number of things. In the sense of that, of course, an ISO format in comparison to the old FIN format can carry much more information. So it allows things like reconciliation much more easier. So it caters actually for a client need. At the same time, again, it goes back to making it end-to-end structured, make it harmonized, and therefore regulation comes into play in order to ensure that all the market infrastructures play, again, between themselves, have the same common language. So the regulator is important. That's what we have seen in SEPA as well, in order to put this forward. I mean, the one thing is, maybe the last sentence to that one is, it's not only the format, you also need rule books in order to know how to play that game. Yeah, it's not only that there's a format, the format is very technical, but you also need a rule book in order, which describe actually the instruments in use.
Well, Irene, you've been waiting there very patiently. I just want to pick up on the regulation side. I mean, how can standards be employed really in the difficult area of market governance?
Yes, what we have seen is that in the 20 months that the European Market Infrastructure Regulation, EMIR, has been put in place, the regulators had been focusing on what had to be reported without being prescriptive in the way it had to be reported. This has resulted in some pretty fundamental issues we have had in terms of the data quality and also the interpretation of the market practices across the countries impacted by EMIR. In the meantime, ESMA has issued 14 Q&As where they try to clarify how the market standards had to be implemented. And what we are anticipating and expecting is that there is now enough maturity that they come up with technical standards that will be the ultimate harmonization in terms of aligning the way the 6 approved trade repositories, of which RegistTR is one of those 6 TRs, provide the data into what we call the inter-TR reconciliation for consumption and surveillance by ESMA.
So in terms of market governance, do you think this is a step in the right direction?
Oh, absolutely, absolutely. We're still, we're not at the same level of maturity as we have been experiencing with standards, whether like in the post-trade world, where for settlement reconciliation, whether it is 15022 or 20022, is really part of the way financial institutions have been operating. Here we are much more at a nascent level, but this is the only way forward if we would like that. First of all, we achieve transparency and visibility that is the purpose for having put those regulations in place in the first place, and at the same time efficiency for the market players that they have to report to the trade repositories, to the authorized reporting mechanisms, and all of those entities that take care of regulatory reporting.
And do you think this industry is ready for transparency? Because it's down to collaboration, which is one of the key themes again of this conference. What more could be done there?
Absolutely, absolutely. I think what we have seen today up until now in terms of the issues on data quality is simply the absence of guidance, a very specific guidance. To give an example, for forex swaps, there are market practices that require that you report both legs of the transaction using 2 UTIs, where other market practices is that you report in with 1 UTI, both each leg. The result is that technically both approaches are correct and you are satisfying your regulatory requirements. However, if you need to aggregate the data, you will not find matching, a reconciliation between the information you receive from both counterparts. So it requires both efforts in terms of harmonization, market practice, and then the common technical standard that will help and ease the reporting from the market participants.
Well, thank you very much to all of my panellists here looking at standards. Thank you very much, both from a harmonisation point of view and also a regulation point of view. Well, yesterday I managed to catch up with one of the busiest people at Sibos. Yes, David Puth, who's the CEO of CLS, and we were in the Sibos TV lounge. Well, I'm joined by David Puth, who's the CEO from CLS. Welcome to you, David.
Nadine, very nice to see you.
From a foreign exchange point of view, it's been a real interesting year in global markets. Can you tell us about the key trends?
Well, it certainly has been an interesting year. When you think back to January, the move by the Swiss National Bank got the year off to a very busy start. And then just several weeks ago, the move by the Chinese to modestly devalue their currency. It's been a very busy year. The trends have been more towards the appreciation of the dollar, and as we've seen, that's had a very big impact on monetary policy for central banks around the globe.
How about Asia?
Asia is very critical for CLS. In fact, it's probably the most important region that we have today. We've seen growth of roughly 15% in our volumes at CLS over the course of 2015, and much of that is coming from our investment in Asia.
Now, operational resiliency is a key theme at this year's Sibos. How important is it to the global foreign exchange markets?
I think operational resiliency is critical for all markets, but certainly for the global foreign exchange market, resiliency is job one. CLS provides, through our PVP settlement service and our real commitment to resiliency, something that enables the market to continue to function smoothly every day, as we have for the past 13 years of our operation.
And following the financial crisis, although that feels such a long time ago, banks have had to really change the way they operate. So within this context, would you still consider settlement risk as significant a risk as it was in the past?
Well, certainly it is. I mean, settlement risk still remains the most important risk that exists in the foreign exchange market today. And surprisingly, there are still a number of financial institutions that are not settling by PVP. It's our job at CLS to ensure that the bulk of the market is using PVP settlement service, and hopefully that service of CLS.
So we've got last quarter into 2015. Is there anything new coming out of CLS?
We have in front of us the busiest quarter that we've had since the launch of the company. We have 3 new services launching. We have a compression service for foreign exchange forwards that's going live right now as we speak. In November, we will bring on the Hungarian forint as the first currency that's become part of CLS since 2008. And then lastly, we're launching a cross-currency swap service towards the end of November. All of this with the backdrop of the work that we're doing with SWIFT on our member gateway migration project, which will be completed in the first quarter of 2016.
Well, David Puth, you've got a very busy last quarter. We wish you all the very best with that.
Thank you very much, Nadine. Good to see you.
Thank you. So that was David Puth from CLS, the multi-currency cash settlement system. And David was certainly a fascinating man to interview, as is the subject of our third big interview with the journalist Jonathan Rosenthal of The Economist. And Stephen Cheer interviewed him earlier today.
Well, Jonathan, thanks for joining us here on Sibos TV. Let's have a chat a bit about compliance, because I know you are, well, you've been very compliant, and it's pardon the pun, but and moderating the compliance forum here at SWIFT. Based on what you've heard and seen this week, what are some of the headlines in the compliance world that have been trending?
Yeah, well, so I guess, part of it is just putting this thing in context, that we've seen this massive foot on the accelerator for 5 years with, regulators and enforcement action just really taking off. In fact, so the Compliance Forum opened with a regulator from the Monetary Authority of Singapore who made the point that 325 billion in fines have been paid over the past couple of years. We also had the FATF opening the session, and they were using quite strong language for regulators. They were talking about egregious misconduct on the part of banks. So you've kind of got regulators looking at this over the past 5 years, saying this is an industry that's behaving badly and needs to be spanked. And the rest of it has been the industry going like, hang on, guys, where do we make this work?
Wow. So was that a bit of a shocker? I mean, were they thinking, well, it's not my fault. Actually, you guys are making life difficult for us,
Well, so I guess the biggest eye-opener for me here, and this is really a kind of personal comment, is just how great the divide is between the regulators and the regulated. And, you always hear bankers complaining about regulators. You kind of expect that. That's what they do. But to then actually have, it made so apparent that there is this massive gulf between the regulators and the regulated. They're not on the same page. They're not even in the same room, frankly, when it comes to talking about stuff. The one lot of guys saying, gross misconduct. On the other hand, you've got the bankers saying, we're doing our best here. We're really trying to comply.
Right. So that is going to be a big problem then. If they're not even on the same page, well, are they at least in the same country? We would,
exactly. So I thought that. I thought that was really interesting. Clearly, a lot of dialogue needs to happen, but. The dialogue is not happening in the sense that they might be using the same words. So one of the issues that came out is that, and without getting too technical, but the regulators were talking about, the exceptions that, kind of regulation and compliance needs to be risk-based. So you don't, kind of just have to do everything all the time, even where there's low risk. But part of that kind of says that you're comfortable in a world of probabilities. You accept that there is some risk in the system and that you allow banks to take some risk, not just on kind of credit and the normal stuff that banks take risk on, is my loan going to get repaid or not? But essentially also saying, if a bank is doing its best to comply with, the various regulations on money laundering and kind of know your customer and sanctions, but accept that, if it's risk-based, a very small percentage of things are going to go wrong. And regulators need to be comfortable with saying, a little bit can go wrong, and we're not going to put you on the naughty step. That's not happening yet.
Okay, so that didn't go down so well with the banks. I mean, do they feel there needs to be a clearer sort of instruction, clearer guidelines on exactly where they can and can't go?
Well, that's kind of what they want. So they want certainty, obviously, but they. A lot of issues are being laid on top of each other. So some of the other stuff that came out in these various fora is there's just kind of increasing complexity. So if one looks at sanctions, for instance, we've seen some massive fines and enforcement actions against big banks for sanctions, kind of relating to Iran and the like. There's probably a general sense within the industry that everyone is now complying with that. They know who they're not meant to do business with, and they've got the systems in place to make sure, stuff doesn't go through, Iran if it's on the blacklist. What's really complicating stuff now is that regulators are not just saying we're going to blacklist a country. They're moving to these targeted sanctions. So they're going to say, we want you to make sure, if you're a bank, that any of the money that goes through your system doesn't end up ultimately in the hands of someone who's with Islamic State in Syria and Iraq, and that becomes hugely complicated because it's not just kind of is this a name on a list? Tick it off. Don't give them the money. Actually, regulators are now saying you've got to know where that money is going, who it came from, what it's going to be used for. So it's a really complex world.
We were talking about this a bit earlier in another session. And again, they're saying right down to the passport numbers of the individual owners of that company that is your customer, And again, to come down to that level, I guess banks are saying, but we've got so many customers. How can we do that? Do they feel that it's then being restrictive in terms of how they operate? And again, it's about finding that balance, right? Which we don't seem to be near to finding. Is that your sense?
Yeah, we don't. So we've moved from a world where I guess everyone in the banking system now accepts that you need to know who your customer is. That's fair enough. So kind of know your customer. But we're now moving to a sort of know your customer's customer. So that becomes really complicated. We're also starting to see pushback from outside the banking sector. So one of the things that really struck me as interesting in one of the sessions was we had a guy standing up from the, I think it was the Association of Corporate Treasurers. So here you've got, directors of companies who are saying, you know what, when my business, my corporation wants to do, kind of business with a bank, the bank is coming to me, as the corporate treasurer and saying, kind of, we want to know all about your personal finances and they're kind of saying, hang on, this is a step too far.
But is it a step too far? I mean, your sense, because again, the regulators will say we're concerned about security, about terrorism. We need to know exactly whose money this is, where is it going. They're looking for the money trail.
They are looking for the money trail, and frankly, also, what came out in some of these sessions as well. We had some guys who were former senior US regulators who were involved in enforcing sanctions, and their view, which I think really does reflect the US view, was, you know what, everything changed on 9/11. Kind of banking became a matter of national security. So we weren't just talking about the money trail, we were actually talking about, kind of guys flying planes into buildings. So that, I think everyone now accepts that is a real issue. The question is, where do you draw the line?
Is this happening on a global scale? I mean, we talk about, in many developed countries, here in a country like Singapore, in places like New York. I mean, it may work slightly differently. You're in Africa, how do you think all this is playing out in the emerging economies?
Well, so I think a couple of things are happening. I mean, on the one hand, you've got this move towards regulatory convergence. You do have regulators sitting down and a lot of pressure from the industry saying, you know what, guys, give us a set of rules and we'll comply with them. Again, one of the issues that came up today was, we're seeing sanctions now being eased back on Iran. The United States is putting out a list saying you can do business with this list of banks. The EU is putting out a list. You look at the two lists and they're not the same. So I mean, in that sense, the industry's got a fair point, which is saying, look, guys, give us a set of rules. Just tell us what to do, we'll do it. There's a lot of push for that to happen. It's not really happening yet. But I also think what's kind of interesting is that we're beginning to see the beginnings of a pushback. So part of that pushback is this whole issue of de-risking. A lot of banks are simply saying, and Africa's particularly hard hit. So a big global bank says, I've got a little bank customer somewhere in Africa. We're doing correspondent business with it. We do, however many transactions a month. They may be a perfectly honest, perfectly good, perfectly compliant player. But by the time I've sent out my compliance team and ticked all the forms and checked out, know my customer, know my customer's customer, at the end of the day, whatever business we do with them is just not going to pay for it. So a lot of the big institutions are simply saying, we'll walk away from this. Thanks very much. So you're seeing, quite, good institutions in Africa just being shut out of the financial system. And they're going to look elsewhere. And I guess where the anecdotes start coming in is that a lot of these guys are now looking to RMB. It's like, okay, we can't touch the dollar system. Let's start. We're doing a lot of trade with China. Let's see if we can start doing that trade in a different currency.
Okay. So your sense then that this pushback is it about time, and will regulators be willing to come up with something more standard, more neutral, perhaps? How are they going to work it out?
Well, so it's a real challenge for regulators because I think they're reaching the limits now of their powers. For 10 years, you had a kind of system where, frankly, a guy sitting in the state of New York, we're not even talking, the US Fed, we're talking a state regulator, could go and impose global fines on kind of big global institutions, and whatever they said went. The issue that they're now facing is that having kind of used these powers, some might argue abused them, but having used these powers almost to the limit, they're actually weakening them. So if you have a whole lot of financial institutions, let's say in Africa, let's say in Russia, let's say in Iran, saying, you know what, we don't want some guy in New York kind of telling us what to do. We're going to start pricing stuff in a different currency, and we're not going to touch the US. And so I think that really has to be a wake-up call to regulators, because I do think that on balance, the regulation is, firstly, it's been well-intentioned. Secondly, it's had good consequences. I mean, particularly in Africa, again, the long reach of US law has been quite helpful in the sense that, if a Nigerian, for instance, and there have been some arrests in the US, if a Nigerian is doing money laundering and the local political system is unable to kind of get to grips with what they're doing, I think it's quite helpful if an authority in the US or the UK picks them up. Right. That's got to be good for Nigeria. It's got to be good for the world. What we don't want is this kind of complete fragmentation of the financial system into a million different parts that don't work together. And frankly, that's not good for the US either.
And that's the scary bit, is that it is a possibility with the way things are heading.
I think it's a real possibility.
Okay. Well, let me ask you then, looking at the Sibos from last year, 2014, to where we are this year, there were certain issues that were looked at. Again, compliance was one of them. Have we come further? Have we progressed in that 1 year?
Yeah. Well, so on the detail, I think we really have. So I'm going to, and hopefully this isn't too deep a dive, but one of the issues that really first surfaced last year was this whole question of de-risking. And at the time, people were saying, look, we think something is happening here. It's something we've got to worry about. I mean, that debate has moved on, and you've now got senior regulators saying, yes, we're looking into this. I mean, there is some argument within the regulatory community about how much of a worry it is. There's an argument, senior regulators, we had the FATF again saying there isn't, in their words, empirical evidence that regulation is causing this. But they are saying something is clearly happening, and they are saying financial inclusion, in other words, making sure that small banks in Africa, individuals in Africa, etc., other parts of the developing world have access to the banking system. They're saying that's an issue, and so they're pushing financial inclusion back up onto the agenda, whereas for the past few years it's really just been kind of sanctions, money laundering, compliance.
Okay.
So that's one area of advance. I think the industry is also advancing. So a year ago there was a lot of talk, but it was very abstract talk about saying, you know what, each of us as banking institutions are duplicating efforts. So once again, this kind of know your customer. Each of us is going along to all of our correspondent banking relationships and saying, can you please fill out these 355 forms, and we'll send a guy to check that you filled them in. And now that, so last year there was talk about saying, hang on, can't we just set up a kind of central repository, some sort of utility where everyone puts their stuff into one place, we all get access to it, we share the service, reduce the cost. And so what was just a theoretical possibility last year is now in practice. A lot of banks are doing it. Starting to use it. So that's a huge area of progress.
Okay. So then looking ahead, when we possibly meet again next year, the next Sibos, what would you like to see, or areas you hope will have been addressed by then?
Well, so again on this, financial inclusion and de-risking is huge. In one of the sessions, we did a digivote, so we polled the audience. And the question to them was, it was really talking about sort of big banks and small banks, and how small banks are really kind of at the receiving end of this de-risking. So the question to these guys was, how many of you have had your business turned away by your correspondent banking partners? And the answer came back at 80% yes, which was staggering. So I was quite shocked by that. I think everyone in the room was quite shocked to hear that 80% of institutions. So everyone accepts that this is happening now. They accept that something needs to be done. And what I would really hope is a year from now we can actually say, you know what, we've reached peak debanking or peak de-risking, and that now the curve is going the other way.
Okay. You should stop being a journalist and be a banker. That might help. No, you don't think so?
I think it's
you thought about it.
Far too complicated.
All right. Thank you, Jonathan.
Nice to chat.
Okay.
Well, thank you very much, Steve, and also Jonathan from The Economist. I thought it was a brilliant chat. I hope you enjoyed that too. So please join me tomorrow for our last day of Sibos TV, with the action starts at 8:30 with Good Morning Sibos. So enjoy the rest of your Sibos experience today. See you soon.